Woo! Episode 36, True North. We are here with Adrian, Dan, and the hardest working man in Bitcoin, Tim Kotzman. We're celebrating all-time highs. We got fire in cyberspace, and let's get it on. Congratulations to everybody who's been hodling through all the chop and celebrating all-time highs with us. So, I mean, we'll see what the market for strategy and for all the Bitcoin treasury companies. We'll see how the market reacts to all-time highs tomorrow. But I'm getting tagged in screenshots of here's IBIT's price and here's strategy's price, and I think Adrian's about to crash out if he sees any more of this common ATM drivel. So I know he's anxious to talk about it. So why don't you get us started, Adrian? What do you want to talk about with price action?
All right, so price action right now is not ideal. I understand. There are a lot of people that are disappointed. I understand. But this is what I was talking about with all of the ATM conversations. Whenever the price went down, it was the ATM. Whenever we chopped, it was ATM. Whenever we started going up and then went down again, it was the ATM. So if the ATM was instantaneously impacting price like that, and people thought it was, now that it's been off for a little bit and the price action is still doing what it's doing, I hope people can maybe open up their minds to understand that there's broader market dynamics at play that's driving price action, and stop blaming Sailor, stop blaming us perhaps when the price doesn't do what they want it to do, stop looking for causes that are outside of perhaps more logical conclusions, I guess I would say. There's a lot of stuff that's impacting price right now. And I think what we're seeing is that it is not as if Sailor's going to push a buttons or stop pushing a button and then the price is going to just rip, right? So I think people either are going to start being patient or they're going to start maybe rotating out. But I think for me personally, what kind of helped me read the tea leaves a little bit was what people were saying about earnings. The fact that we saw so many people in the market saying that EPS was still going to be negative, even though with FASB we had that $35 share blowout, that tells me that there's a wide disconnect between what the investor base on X thinks and what the actual market thinks. And I think the market is telling us what the market told us what it thought with those negative EPS ratings, is that the market's discounting the Bitcoin altogether. And I think it's being priced accordingly with some of that in mind. But that doesn't mean it's going to be that way forever. I'm still long-term bullish, but the key part of that is I'm long-term bullish. Price performance is not going to be linear. It's going to outperform over time. And what we're seeing right now, what I've been seeing, and I know what a lot of you have been seeing, is that people are losing their shit a little bit because the price hasn't just ripped out right now with Bitcoin at all-time highs. So they can't. I don't know if they're still going to blame Sailor. Some still are. I just think that people need to step back a little bit and just wait and see what happens if they can.
Yeah, I mean, Tim, why don't you weigh in, because I'm the resident bear here.
Real quick, what you're hearing right now from Adrian Morris may be amazing, but it's not financial advice. Soleil,
awesome. We got the live version today. Appreciate it, Tim.
Oh, and happy Bitcoin all-time high day. It's all the bears, all the noise. It's like people aren't even grateful for a Bitcoin all-time high. What is the world falling apart? Bitcoin is hope. Over to you, Dan.
No, I mean, I agree. I think what Adrian's saying is right. I don't know how much ATM is like a really tough question because the facility of the ATM, maybe the common share dilution doesn't matter because it's accretive to shareholders. 100% totally get it. The ATM facility in itself, and hearing kind of the inner workings of it from a couple of the people that do in fact broker those deals, it can be quite predatory towards shareholders, right? Like if you're a convert holder, where do you get if you're a convert holder and you short the stock, and the price falls, where do you get your exit, or where do you close your short to realize that gain in your gamma hedge, right? In your gamma trade? Well, you get it from the ATM. So that facility, I think, to a lot of people has been a little bit predatory. And I think it's a combination of the ATM with the converts, and obviously we're moving away from the converts. So that's a great thing. So that's great. But I think the forward guidance from the earnings call of no ATM below 2.5 is a great metric, because when you issue shares, what is the issuing organization saying to the market? That essentially the business, whatever the business is overvalued, right? Like you look at Berkshire, what do they do when they believe their business to be overvalued? They'll issue shares, they'll sell shares and capture that spread, that ARB. So now Strategy has placed kind of an internal benchmark on the value of their treasury operations, which they believe to be 2.5 mNAV plus, right? So that's what they think their treasury operations, that's their total value of their treasury operations, which I think is cool if they're doing that. I personally have no delta exposure to MSTR, so I can't say that anymore. But it still, I think, is a really good guidance moving forward and into the near kind of long term, especially with the volume of the press ramping up, with stretch being such a really game changer, in my opinion.
Well, I think that the guidance was a bit of investor relations, so I would agree that it could be, in theory, good to put out there. But the thing about the shorting, I think that what people are doing when they say that about the ATM is that they're blaming the road for the direction of the traffic. The reason why strategy is getting shorted, I think, would occur with or without the ATM, because the market is telling us that they do not value the Bitcoin as a legitimate business or as legitimate earnings, and they're shorting the stock as a result. So the shares being issued, yes, you can say that mechanically, all things being equal, that can be predatory towards the shareholders. However, all things are not equal. There are a lot of things that are pushing this I hate to use the term trade, but there are a lot of things that are pushing this trade. And the direction of the traffic is still market wants to short. So whether there are more shares or not, the shorting is still going to take place.
That's a great point. What do you think about, do you believe the principal or capital appreciation of Bitcoin should be considered earnings? I feel very strongly that BTC gain should be the mechanism or the earnings on which there should be placed a multiple. So for anyone watching, BTC gain is effectively the new net dollar value of the Bitcoin per share accrued to shareholders over a certain period of time. That's BTC gain. So it's like earnings. But I don't believe right now the full gap or FASB earnings is like an earnings that garners a 30 to 50 to 60x multiple. I think the BTC dollar gain could garner a 30, 40, 50x multiple, but that's it, not the capital appreciation of Bitcoin. I feel very strongly about that.
Yeah, I think that's exactly what the market is telling us. So what the reason why I've been pushing sentiment and market dynamics so much when I talk about this is because, to your point, Dan, if we take a look at the FASB gain, that's a one-time hit, right? We got that earnings blowout. Now, in terms of long-term earnings, what we're saying each quarter is that the repricing, whether that's going to be negative or positive, those are the earnings, right? I think what we're seeing in the market is that the market is saying, no, we don't think that's earnings. And they're trying,
right? And that does make sense. Like,
it does. And they're valuing the equity appropriately. Now, here's the flip side of that. The reason why I did the post in community today that I said I focus on NAV, not on the ATM, not on the mNAV, is because the ATM is, in my view, and I've talked to so many people about this, and I've researched it for so long, it can, all things being equal, can it tick the stock price down? In theory, yes, mechanistically. However, there's too much going on in this trade right now with regards to the options market, with regards to MISTI and IMIST and the leverage plays and the convertible ARB and all of those things to say that the ATM is having any measurable impact on the price. It's the smallest factor. So that said, I then don't look at mNAV because mNAV is going to oscillate. That's market sentiment. So NAV, I think, is the long term what's going to make strategy earn its multiple when they get credit ratings, when Bitcoin appreciates in price, when they can bring more offerings to the market, and perhaps even leverage their Bitcoin in different ways that Saylor and team are probably reluctant to do right now. So that is where the multiple is going to come. But the problem with it is that we saw the run up last cycle into between 2020, 2021, and the middle of 2021, and then we saw the long-term run up in strategy overall. Everyone's assuming that's going to rip that way with the same kind of multiples. But that was in a market where they were the only player in the game. There were not as many Bitcoin treasury companies right now. There wasn't as much mind share in the sense of, you now don't just have strategy. You have strategy, you have Similar, you have Metaplanet, you have Smarter Web, you have Capital, you have all of the other Bitcoin treasury companies that are taking away retail interest that, in my view, would be going straight to strategy. Because if they weren't here, what other leveraged Bitcoin player are they going to invest in?
What do you think? What is your expectation of NAV over 10 years plus expectation of Bitcoin yield? And what do those expectations result in terms of outperformance?
You mean mNAV? What kind of multiple they'll see?
Yeah, I guess that's my question. Because like when I have my models, like I sound like Gladiator over here, but I have my models for how much I'll share them with you yourself. But I have my models graph they can issue based on like a consistent leverage ratio, a sort of 40 to 30% decaying CAGR in Bitcoin, and then maximizing leverage ratio of how much actual prefs they can issue and what kind of Bitcoin yield that will generate for the common equity. So like I have my models, but then the question becomes, will they do something crazy that boosts the mNAV? Because like I know we don't like to talk about mNAV, but ultimately if you're trying to price this thing, the mNAV is a monster portion of deciding how you're going to allocate to Bitcoin versus MSTR. So Adrian, I guess
the multiple is the whole thing that's driving it. Yeah.
Right. So my question to you is like, what is your expectation of mNAV expansion, and what are your biggest sort of catalysts? Do you think their Bitcoin yield will be disproportionately high over the next 5 years, and thus if the multiple compresses, it will still outperform Bitcoin significantly? Or do you believe the business itself will potentially change, and thus the mNAV will expand despite whatever Bitcoin yield does, and that will be the generator of outperformance? I think that's my question to you.
I'll answer from two angles. Bitcoin yield is inevitably going to trend down, because as Bitcoin's price goes up, you're going to generate less yields based on the amount of Bitcoin you can purchase, right? So that's always a metric that's going to be trending down. Same thing with Bitcoin per share. Now, my view is that the business is going to have to evolve, and that's going to generate the multiple. And I think that what we're seeing right now is growing pains. They had the first leg of their evolution with adopting the Bitcoin treasury strategy. Then they had the second leg with the preffereds. So the preffereds are going to scale, but I don't think that they're going to scale like 10, 15, 20x in the next 18 months. I think it's going to be a gradual progression.
Stop being a bear.
Well, I don't want to sound bearish, but I'm trying to be realistic, right? So are the preffereds going to scale? Yes. But on the flip side, before I get to my final answer, the preffereds, ironically enough, could be taking away interest from the common, because people that would otherwise be invested in the common might be now invested in the preffereds. I know a lot of guys that say, I don't own strategy, I own strike. I don't own strategy.
You can talk about that, because I think I know I've been posting it a lot, but it's just been this ongoing thought in my head that I can't seem to figure out. Maybe we could talk about it on live stream. And I know people are saying, I have very little exposure to Strife and very little exposure to MSTR right now, but I think there's a weird edge case where Strife becomes the MSTR. And we can talk about that. And you might be like, Dan, you're absolutely nuts off your rocker. And I'm thinking a little bit, but I want to talk about that.
Yeah, so and that's what I'm saying. The preffereds have created a new investor base, but ironically enough, that investor base may have been in strategy instead. So
by the rotation of capital is what you're saying.
Yeah, so we have a few things going on with equity. We have all the other mind share going on with all the other treasury companies that's attracting interest. We have the preffereds that are scaling the amount of Bitcoin that they can buy, but also siphoning away capital from the common, from MSTR. And to your point, Dan, to answer your question, I think that, in my view, because Bitcoin's price is going to appreciate, yield is inevitably going to only trend downwards. Bitcoin per share is only going to trend downwards. Therefore, the business itself needs to evolve. And I think that's where the multiple comes from. And I think that they're going to have to look at different ways in both acquiring Bitcoin and leveraging Bitcoin in order to justify a multiple. Because
completely agree, 100%.
Coming back to my point, the market is going to
indicated that prefs are that vehicle by which they will do that, right?
I think part of it, yes.
I think we have to take it in the face value. And they said, we will not acquire other businesses. We will not lend out our Bitcoin for any sort of yield. We are issuing these prefs, and that's the way we'll generate Bitcoin yield. So I think we have to take them at face value and say, for the time being, 1 to 4 years, the prefs will be the way by which they yield Bitcoin. And that's the most important thing. There's people in the comments saying, the prefs don't, why is Dan talking about prefs? Why are you not talking about the prefs? The only reason your comment is worth more than one mNAV is based on the success of the preferred stocks. Literally. If
that's
the
a big portion of it.
Successful, your comment is fucked, buddy. Like, I don't know how else to say it. So I think all the focus should be on the prefs.
Look, the way that they can justify multiples that those prefs get a credit rating, that's going to justify multiple by itself, right? And when they scale, because they've already been successful to your point, but they're going to be more successful. But I think that this needs to be a delicate balance, and that's what I mean by they're going through growing pains. Me personally, I know they're saying that they're not going to lend out their Bitcoin for yield. I don't think that's practical. I think when Bitcoin hits 250, 500, or $1 million, the kind of capital they can bring in by doing that, for them to say, no, we're not going to, I don't know if that's going to work long term. That's just my view. And I'm talking like 3, 5, 7 years down the line. I'm not talking like 18 months. So, to your point, are going to be a very, very powerful vehicle for them. But if I'm being fair, I have to give the flip side to that. As a preferred scale, so does the dividend payout, right? So that's going to have to be something that needs to be watched if the common stock doesn't at least maintain or appreciate somewhat in order to handle that growth. So this is a seesaw that they're going to have to balance through. And I think that's what we're seeing right now. To get from 1 billion to 100 billion was a huge move. I think from getting from 100 to 200 or 100 to 250 is going to be much harder than people think. And it's not because of anything that they're doing wrong. It's just because of the nature of what they're trying to create. They've built out an entirely new model. That's why I call it an economy. They've built out an economy around their common stock, and they've built out an adjacent economy to Bitcoin. This is going to take time. They've already been successful, but it's going to take time.
In words, right? He's built the L3 on Bitcoin, the layer 3 on Bitcoin.
Essentially, yes, that's essentially what he's done. Because everyone in the prefers or the common is a passive investor in Bitcoin, whether they know it or not. So he has created an entire secondary economy around Bitcoin through the common stock and through the preferreds. But this is going to take time to scale. And I'm just saying that if Bitcoin is at $1 million and they have 1 million Bitcoin and they have a 1 trillion market cap, they're really going to say no to generating yield on a portion of their holdings. I don't know. I don't know if that's a tenable position, because want to know why? Because someone else in the market is going to do it. Either Metaplanet or someone else is going to do it, and then they're going to start bringing in tens of millions of dollars, and everyone's going to pivot looking at strategy like, well, what are you doing? You have the largest holdings. You can be bringing in hundreds of millions. Why aren't you doing this? The shareholders will probably demand it at that point.
Yeah, but I think that's probably the biggest risk, is because I think that's probably the biggest risk, in that whoever's competing to give out the most, like returns, someone's going to overextend themselves, and they're going to be the first ones to get wrecked. So, hopefully the intelligent leverage turns into, intelligent lending, I suppose.
I would say that it would, because I'm not saying that they're going to lend out their whole stack, but if they have 1 million Bitcoin, using even a percentage of that would bring in tens of millions of dollars. And they can do it in an intelligent fashion. I think there's big banks that will let them do that all day, every day. So, I am not a rehypothecation guy, because I saw it happen last cycle, but rehypothecation was always going to be par for the course as we hit hyper-Bitcoinization, unless we collapse the entire capitalistic model that we have right now. So assuming that it still goes forward, and assuming that Bitcoin is going to be a part of that, a very, very large part of that, I think they're going to have to adapt their model, and they're going to have to be open to doing things that they have not currently considered. That's just how business evolves. So will the market like it? I think that the market will. And I think that once they get steady state with these preferreds and they scale, I think that's the next evolution. They're going to have to monetize their Bitcoin in different ways. It can't just be to back the preferreds. Because what are they going to do? Have 15 preferreds and siphon away all the possible capital from their common stock? I don't think that's practical. They're going to have different levers, and they're going to have to have different verticals. But Neithu, your point is very, very well taken. If they fudge that up, the one-way strategy can get blown up is with that. But on the flip side of that, if they have a small portion of their holdings being used to generate yield, what's the risk? If they have 1 million Bitcoin and they're only using thousands, so like it needs to be weighed.
It would make a non-material different impact to their overall cash flow or value, right? If they're making 5%,
depends on how much they use, and depends on what Bitcoin's price is.
But if they're making 5% on 1% of their Bitcoin, they're still dominated by their book value, right? But it's a good thought exercise. I don't mean to.
I think I just remember Sailor, and maybe I'm misremembering, just talking about counterparty risk a lot. So what happens when your counterparty risk is JP Morgan or the US government? Is that different? Maybe that's different.
That's an interesting
experiment. Yeah. I think that's functionally different. It's not like Three Arrows Capital or Alameda or FTX or BlockFi.
Yeah.
If the U.S. government is your counterparty, that I don't know if that's necessarily the same kind of level of tail risk that we're discussing in terms of getting blown up. If they even leverage thousands of their Bitcoin out of the millions that they have, and Bitcoin's at millions of dollars, and they do that perpetually, that's a revenue stream that they can now add to the books. But they're also probably going to have to reclassify themselves as a business if they do that, because of the kind of earnings it can bring in and how it's going to hit the balance sheet. So there's so many different things that they have to consider in terms of how they grow. Another way that I know I've been talking about, and people think I'm crazy for talking about it, their core business has room to scale. They don't need to become Microsoft or Palantir or NVIDIA. They just need to scale it appreciably. And if it can get to a size that allows them to expand their client base, that can demand a multiple as well. There's all kinds of things that they can do that I think that they're going to have to consider as this grows and as this becomes more mature. Because I think the 3,000% was a benefit of being a first mover. So they've already got that first mover advantage. Now they need to look into maintaining that lead, which obviously they're going to. And they need to look into different ways to justify more long-term and broader market multiples.
I think you're totally right, Adrian. And just to illustrate that point, I want to bring up a sheet of max issuance of prefs before we get deeper. So, just to recap, what we've been talking about is different forms of business models to demand a premium, because ultimately price is determined by underlying Bitcoin and the multiple placed on top of it, which could be a function of future expectation of yield, or a forward-looking PDE multiple on whatever revenue they generate via Bitcoin. But the prefs right now are their main source of Bitcoin yield. We know that they're not going to issue any more prefs in the future. So when you're looking at MSTR, right, you're looking at essentially a future claim on the assets of the corporation, the assets being the Bitcoin. So you need to have expectations and assumptions over future Bitcoin yield. And the only way to model or price that out is to figure out how many Bitcoin they could essentially acquire per share on a fully diluted basis. And that's to look at how much pref they can issue based on Bitcoin prices and their leverage ratio. I think one of the key things in the latest earnings call that people don't talk enough about, it was the mention during the Q&A that the leverage ratio could be up to 40 or even 50%. And that makes a massive, massive, massive difference in terms of the amount of Bitcoin they can yield per share, and especially in a falling volatility environment, which is exactly what's going on here, right? Bitcoin's volatility will continue to fall. A higher leverage ratio means you're essentially getting more yield on your Bitcoin, because the prefs are technically yield on the Bitcoin. So what I've modeled out is a Bitcoin price at the end of 2030 of $430,000. That's a bit conservative in my opinion, but with a pref ratio of 30% and ATM usage just to cover the dividend obligations, roughly. So that's about $100 million a month. That's a little bit exaggerated, but bear with me. If you, again, 30% debt target based on Bitcoin prices up to 430,000 Bitcoin in 2030, you could see that strategy just via pref issuance and ATM to manage the dividend payments should have around 1.5 million Bitcoin. So that's a huge number, right? Absolutely massive number. And that would put the outstanding. This is the real key and something people will have to get comfortable with or understand, right? So, or they'll have to make their own assumptions about. I don't mean understand, but if these assumptions prove to be true and they have a 1.5 million Bitcoin, they have a market cap of 770 billion with a 1.7 multiple. I've held multiple constant. Then it'll be 180 billion of prefs outstanding. So the bet you're making by holding MSTR common is essentially a bet that the prefs will be a key player or a key part of the entire global bond market. And I think that's interesting and super relevant. And I believe actually that the prefs and Bitcoin-backed equity will be a huge, huge part of the future of finance. We can look at stretch. I think we want to go through maybe a little bit of stretch volumes. So stride volumes are low, 15.9 million. That's a great, if you want to hop in there, I think this is a really good trade. Buy stride, collect the dividend, wait till it bumps up a little bit %, you're positive on it, and sell it. The stride dividend's insanely high. That's a cool trade. Strike trading too low in my opinion. Strike should be trading a lot higher because the effective yield when you take out the call option on the equity is almost 13%. Stretch, extremely high trading volumes, and they continue to be. This is a really good sign, and I think this will likely trade up to par soon. It's going to take a little bit of time. And strike, the crown jewel, which I think is kind of the wild card in MSTR capital structure and isn't talked about enough. We can talk about that later. So I just want to go over those things. A little bit of volatility just to set the playing field for the next conversation. I'll take another 2 minutes and then we'll get rolling. So this is IBIT volatility here, or BTC volatility. And you can see that we've been trending down over a period of time, but we've been stabilized around 30%. MSTR's volatility has compressed from what was 200% during the peak to about 52%. So just shy of 2x that of IBIT, and you see the implied volatility is right around there. So those are where the volatilities stand and kind of the market as a whole. Now, maybe we can keep talking on that, guys. Sorry to interrupt, but
well, yeah,
get out there.
No, you didn't interrupt at all. I think that's all valid. I actually did a post on that recently comparing Bitcoin, MSTR, and the mNAV. And that's another factor. Bitcoin's volatility has been decreasing, so that's obviously going to have an impact on strategy as well. So there's just so many factors that are going on into price action right now. But to your point, Dan, I'm not bearish on the preferreds. I think that is going to be their bread and butter in the future. However, we have to also take into account that there's all kinds of ways that it can play out, and be aware that it may take longer to scale than we realize. And people saying that they only need the preferreds, I think that's being somewhat short-sighted. It will take a lot longer to siphon away from $300 trillion of potential capital than people realize. And I just want to make sure that everyone is aware that this is a long-term investment that you're making. You're not looking to see what happens in the next 6 to 12 months with the preferreds and then get shaken out because they're not at tens of billions and hundreds of billions of dollars each. So I think Dan is right. The preferreds are going to be huge, absolutely huge. It will take time.
Yeah, I was thinking about it I mentioned it on my interview with Tim yesterday, and I kind of look at it as let's just say like a Tesla. If they want to shut down their factory to upgrade it, then you're going to have more costs, and you're going to have lower production for a brief period of time, and that's going to be reflected in in your efficiency. And so the price may lag during that time, but when that upgrade happens, now you've got more product rolling off the shelves. And so I'm kind of looking at the preferreds as like Bitcoin conversion factories, and we're shutting down production on the convertible bond Bitcoin conversion factories, and we're retooling and going over to this other thing. And I'm kind of just like, okay, that, like you said, it's going to take time for that to scale up, and maybe some investors get bored, waiting for that to happen. But if people sold, panic sold Tesla at the bottom, then they didn't get the gains when they get record numbers coming out the door. So I don't really, I don't even think that those 4 factories that they built for the preferreds is going to be the end, right? There's going to be more. That slide that they shared, where they had the yield curve, and there was a big, big black section in the middle where they could stick in at least 2 more preferreds. So they're going to get more, and the ones that are existing are going to continue to mature, but there's no telling if it's going to happen, this month or even this year. So I think you're right, Adrian. There's going to be some patience waiting for these to mature, but long term, my thesis hasn't changed. But I think if people have married themselves to expiration dates on long calls, those things may have gotten a little bit dicier.
Well, I mean, yeah. I mean, the thing is, we have potential bullish catalysts. When interest rates come down, well, I think the market's actually front running the interest rates right now. So I think everyone's anticipating interest rates in September. So we have that as a current macro tailwind. We have potential S&P inclusion. I have my own thoughts on that, but that's another potential catalyst in the near term. And of course, if Bitcoin keeps going the way it's going, because I think we're going to hit between 150 to 200 this year at minimum, that's also going to have a potential impact on price as well. But I just think that we're really seeing right now the maturation of strategy, and I hate to just keep repeating myself and say patience, but really patience is what's going to be needed here. And if you guys are options pretty heavy, I got nothing for you. Best of luck.
Yeah, I'm still in that boat, and I'm looking for.
We can't
I'm just
say
desperate for one more pump.
Yeah, we can't.
Exit
But
my leverage.
Like if we're MSTR bulls, I mean, like, and it's if you believe it's beta on Bitcoin, and I don't know. I don't think you can say like best of luck to anyone in options. Like at one point I was in options in MSTR, and it's worked out for a lot of people over long periods of time. But it's a shame if you're, I think that's a lot of the downward pressure on MSTR is likely that people believe, they believe MSTR is beta on Bitcoin. And if it's not behaving that way, it's difficult to take certain trades. And that was a lot of the messaging at the beginning. So I think that's kind of a lot of the disconcern right now. Everyone who's been in MSTR for a while has made crazy returns. We've all outperformed Bitcoin. That's absolutely great. We can't disagree with that. Absolutely. But if once the stock stops behaving like beta on Bitcoin, for traders specifically, and obviously I am a trader and a lot of people are traders here, you have to change your mental framework and how you are playing Bitcoin with leverage. And I think, I don't know, I'm just acknowledging that it's tough if you're an options purchaser for MSTR.
Well, for sure. I'm in options too, but I've always gone far out of the money, and I've never used it as a way to be a primary driver of what I'm doing. So the reason why I say best of luck is that if you are a trader, you are essentially taking on that risk of you by yourself, and you're trying to play the stock. The stock is not obligated to act in any way. You're making an assumption, and we are assuming that it's a beta on Bitcoin, which it is, and we are assuming that it's going to continue, which I think it will. But the gyrations in that process, I think people have to own. So I understand their frustrations, but at the same time, if you are holding an equity and then you are also playing options, you are adding on additional risk. So you have to kind of take that in stride, both good and bad, is the reason why I said best of luck. So your point's taken, but I just want to make sure I'm not coming across like entirely unfair. I'm just trying to be more measured in the way that I kind of I'm looking at it.
They should take it in stride, like by stride.
Yeah, that was financial advice.
That, I mean, yeah, that can be an angle of it, yes. But all I'm saying is strategy is volatile by itself. Options, playing the options and trying to get additional yields is a valid strategy. I've done it myself, but I also understand that I can't really control what's happening in the market, and I have to take those market gyrations on the chin when they don't play out my way.
And so I posted, it was a little tongue in cheek, but I said, plot twist, what if the mNAV guidance on the ATM that they put out was the same thing that they had been using all along, but everybody was so happy to see the guidance like it was something new. I mean, do you guys think that the guidance that they put out is too terribly different than what they had been doing all along? I'm sure they had a framework internally, they just didn't post it to everybody.
That's a good point. I mean, they probably did. The thing about it is that, you know, if you're correct and they just had an internal metric that they just decided to share with everyone, how, like, what was it? See, this is why I think it's investor relations. I think what they're doing is investor relations. They're trying to assuage a lot of the noise that was going on online. But flip side, did they now back themselves into a corner if mNAV doesn't go above 2.5 for a prolonged period of time? Is the way that I kind of think about it. I do think that they had internal metrics. I really do. I think you're right. Do I think that they were these? I'm not sure. Because if they, you know, so did they have an internal meeting and say, okay, these are the metrics you've been going with. We have to change them, and we have to kind of surface them to the investor base or part of the investor base so that they know that what we've been doing wasn't guiding our decisions, to give them more like line of sight to internal decision making. I think that's possible. Yeah.
Yeah. Anything more about this, or did we beat it absolutely to death?
We may have beaten it to death, I think.
Well, people in the comments must have actually been reading the agenda, because somebody asked what's a digital empire. So this one's coming over to you, Tim. You're the one that's building the damn digital empire. You got 2 marathons and under your belt so far, and congratulations. Oh, he's leaving. He doesn't want to talk about it. He's shy. But you know, there was like tens of thousands. I mean, at one point I saw 80,000-90,000 people, right, Tim, that were had eyes on your marathon digital conference yesterday.
Yeah, I mean, we were down from last month when it was 168,000 toward the end of it. But, you know, you got to, you know, the markets go up, the markets go down, the views go up, the views go down. So, yeah, I don't know that there's been any digital conferences kind of in the Bitcoin space, specifically Bitcoin treasuries. So, yeah, we're kind of like pioneering this, testing the waters. July 8th was the first one. Yesterday was the second one. Really appreciate everybody, including you guys, especially, right? Taking time out of your day to come on and speak. But yeah, to get 42 people up on stage. I mean, people are not going to sit in their seats in a venue for 21 hours straight. So I do think it has legs from that point of view. But, you know, how much will the market bear as far as, you know, we probably don't need a monthly conference. You know, I mean, maybe if Bitcoin goes, you know, doubles or triples or goes to $1 million, maybe we need monthly conferences to keep up with everything. But yeah, kind of trial and trying different things. So I will say the kind of diving into the first in-person conference that I'm doing, and thank goodness I have guys like Ed and Adrian to kind of try to fill in everything that needs to be done. 34 days from now, literally 5 weeks from now, the conference will already be over. So that's nuts. But for those who have been to the venue in Midtown Manhattan, we only have 500 seats. If you go to the Luma link, there's already 200 and some tickets sold. So the reason I say that, I've been doing a lot of research and I don't know the numbers, but just hypothetically, for those that were in Vegas, there were 35,000 people there. Statistically, they probably sold 10,000 tickets or 12,000 tickets in the year leading up to that. And they sold probably 20,000 or 25,000 tickets in the week before. So like, if you look at the Luma link and you see the pricing just goes from like a couple $100 a ticket to like $5,000 a ticket, like there's a reason for that. It is going to be a premium event. I've seen a few comments who are like, these tickets are expensive. We're like, yes, that's why we're here. Like, why do we have 100,000 people on some of the True North live streams? Because people have made a lot of money on MSTR. I mean, it's not a secret. So, you know, not only do you have Saylor kicking it off at 10 a.m., but then you literally have him coming back for premium sessions where he's hosting the session. Like, he's going to ask the questions. So I think that's something that, you know, to my knowledge, I've never seen before. And so, yeah, hats off to guys like Saylor that are being helpful and are willing to work their butts off, because I think that's what we need. What else? I mean, there are other like 99% certainty that some other names that you would recognize are going to be there. We just can't announce it yet because of scheduling and confirmations. But I think the cool thing is we're going to live stream it, right? So it's an unconference, meaning it's not just one guy up on stage. It's not just panel after panel. Visually, it will kind of look like maybe a fireside or a panel, but the difference is audience participation, mics out in the crowd. Like, think more like during, even though we don't really probably want to talk about this, like election season, right? When you have this town hall and people are there saying whatever they want to say. We're literally compiling, and we're going to have this out for a vote to all of the attendees. What topics, like right there, Adrian Morris, like whether it's quantum computing, whether it's proof of reserves, whether it's something else by that point, right? I mean, 5 weeks from now is like 5 years from now in Bitcoin terms, right? So whatever those topics are, like imagine Jeff Walton on stage with Pete Rizzo and Radu and somebody else talking about how the Wall Street metrics are not working anymore, right? These new metrics are needed. And all of this is kind of like, whether you're in Bitcoin or you're in TradFi, it's like breaking all of these quants' brains, like very topical things that people actually care about. And my like personal goal for the conference is I want everyone that's in that studio audience to literally feel like at any time, because they can stand up, they can go to a microphone, or someone's roaming around with a microphone, and they can participate in this conversation with all of us, with True North, with Michael Saylor, with Eric Semler, with everyone in the room. And you're part of this conversation that's being not just live streamed, but memorialized for, you know, what will obviously be hundreds of thousands and millions of people. So I think it's gonna be a really unique opportunity. I know I'm a little biased since I'm kind of working on it, but I'm really excited about it, and we really appreciate all the support. If you go to the Luma link and you use True North 15, you get 15% off your ticket. What's better than that? So True North 15, obviously, I'm very humbled to be a member of True North. So yeah, just trying to, right, we're all kind of doing our things during the day, doing this at night. So I think it'll be a really cool way to get everybody back together in literally prime time season of the historical bull market. And yesterday was interesting, right? Some people were like, no, 150 to 200,000, 180,000 by the end of the year, and then that's it. And Grain of Salt really kind of wrapped up the whole conference literally with me. And he said, we will know in 2026 whether this time is different. It's going to be very simple. If we get to a new all-time high in 2026, this time is different. So I thought that was like insightful. It sounds simple, but I was like, oh, that makes sense to me. So Yeah, that's the Unconferenced. Thanks for the time letting me shill this as hard as humanly possible without being ridiculous.
Oh yeah, man. And just so everybody knows, every dollar that True North gets from that affiliate link, we're gonna smash by 1080s.
So there you go.
We're just gonna hammer it right back into the market. No, I got to comment again because, how long would it take? How many people did you say you had on? 42 or something like that?
Yeah, we added Brian Brookshire, BTC Bitcoin Overflow, and we added, I think we just added one. So I think if you don't include me as the host, I think we had 42 speakers-ish.
Yeah. But imagine how long it would take for 42 people to meet 100,000 people one at a time. And that's why I put dematerialization in this part of the agenda, because, Sailor's always talking about how iPhone basically dematerialized half of the physical world and put it on your iPhone. And, Netflix dematerialized, physical entertainment, renting movies. And you basically dematerialized like hundreds of thousands of individual interactions that would have taken, I don't know, 100 years to take place. And you made all of that happen in a single day. So I just think it's amazing. And you got more flowers to announce too, right? I mean, you're an advisor now, and do you want to talk about that at all?
Not really.
Okay. Well, people were congratulating you, and I said, well, you know what? Congratulations to them for landing Tim. I think that was very lucky of them to do. So you're clearly the hardest working man in Bitcoin, and I think it's just obvious that people gravitate towards you, and the way that you talk to everyone is completely genuine, and I think you just deserve all the success that you're getting.
Thank you, and I do want to apologize for clowning around during the beginning of the live stream tonight. That was unprofessional, and I will blame it on lack of sleep. So I saw the comments. I apologize to Soleil, and I hope you can join me in making money great again, but I hope you can appreciate a little bit of lack of sleep and accept my apology.
Fully understand.
That's ridiculous. No need to apologize.
We love you. Yeah. Every man only gets 2 apologies in their life, so don't waste one on that.
Right.
Oh man, I just got the best compliment ever in the comments. Ben Workman, Tim is everywhere all the time, grinding. All right, thank you, Ben. It's very kind. I did go grab some food, and I got a text, and it said, "What are you doing?" I said, "I'm at the office getting ready for True North. I'm gonna shill the Unconferenced hard AF." And, they just said, "You are wild," right? It's like, why are you not sleeping? So we can sleep tomorrow, right? True North is once a week. We're all here, and obviously we appreciate everybody tuning in.
Heck yeah. So next topic we got on the agenda. So Bitcoin treasury companies, network obligations, if any. So this is something that I've been thinking about lately, and it was actually somewhat inspired by Julie Millard's interview from your first conference, because she was talking about authenticity, and strategy has been number one. They're true to ideal, true to self, all of these things, all of these metrics. And there's a couple of kind of Bitcoin dramas that have been around my X feed lately. We've got spam, and we've got the people running knots in order to try to filter out some of this spam. And then we've got Bitcoin events that may you attend, and you're looking around and you're like, wait a minute, why are there so many shitcoiners here? Like why are people up on stage talking about things that are not Bitcoin? And so do these Bitcoin treasury companies have any kind of ethical or moral obligation to try to ensure the survival of Bitcoin, or weigh in on some of these topics? Or is it just, you're a treasury company, your job is just to stack sats, and Bitcoin takes care of itself?
Well, I think their first responsibility as a company is to their shareholders, and any kind of stewardship they choose to take part in the whether it be the Bitcoin network, running, whether it be running nodes, proof of reserves, whatever other things that they decide to take on, should be, I would say, voluntary rather than mandatory. So, to your point, I don't know if they are required to, but certain investor bases may say that they expect them to, and that would be something that they would have to take on. But primarily, the responsibility of a company is to their shareholders. So I think that is their first responsibility. And whether we like it or not, anything Bitcoin, purely Bitcoin related, in terms of, whether to be core versus not, so what have you, I think that will be secondary to it. Now, that said, I think some of the companies are going to have to take a stance on that in the coming years, because as the network grows and as Bitcoin adoption grows, they can't just say, we have no opinion on it, right? They're going to have to take a stand. But I do think that's going to have to be something that they navigate very delicately.
Yeah, and I was kind of thinking of it as like, let's just say corn as a commodity, right? Since we got the Bitcoin angle. So if your mandate was to acquire as much corn as possible, you would also want to keep it safe, right? You can't let it get ruined by a fungus or something, right? So I think you have to automatically assume that Bitcoin treasury companies want to stack as many sats as possible, but then also you can't just remain silent if there's a threat to that product itself, because if the sats become worthless, then what's the point of Bitcoin yield? You know what I mean? So I think that it's going to be more and more important, especially for the strategies of the world that they have a way stronger voice in the network than anyone else. Probably Metaplanet would may need to weigh in on some of these things too, but I don't know. I think it's a little bit. I don't want to let them off the hook. I know people criticize Elon Musk for being, voicing things about being political and whatnot like that. I'm not really going there, but some people really do think that the spam could be an existential threat to Bitcoin. So it's been weighing on my mind quite a bit, and I to the point where I got motivated to actually run my own node. You know what I mean? And I just thought, whatever, let other people run nodes. I don't need to do that. But it's got me super motivated, and I can't even think of any company. We're always making these announcements like, oh, we bought Bitcoin and this company bought Bitcoin, but I've never seen anybody saying, we're going to be a steward of the network and we're also running a node, right? Has anybody ever seen an announcement like that? I don't think so, right?
No.
Yeah, I hope it happens. Saylor, I don't want to put words in his mouth, but he seems like an ossify guy. Like, he's always talking about the granite, or the bedrock is the foundation. But he's in a bit of a spot too, because people will, if he tries to voice his opinion, people will say that, oh, he's just trying to manipulate the code. The devs to make some changes in his favor. So some of these companies might be in a kind of like a lose-lose situation in that sense. But ensuring Bitcoin's survival, I think people just assume that it's automatic, but it's really up to us. It's up to everyone. And I don't want to let Bitcoin treasury companies off the hook and just say, your only job is to borrow money and buy Bitcoin. I personally don't think that that's enough.
Yeah, no, I think you have a point. The reason why I mentioned the primary responsibilities to the shareholders is because they are a company. But with everything you're saying, the way I see it is that these companies are peers in the network, but they're just peers of a different scale. So how they operate in the network is going to be very much voluntary. And what you just said about like Saylor and strategy, it is true. He may be in a damned if you don't, damned if you do situation, where anything he says, there's going to be a loud outcry on the opposite side just because of his position. just because of the size of strategy as a peer in the network. But that said, maintaining the safety of Bitcoin, the function of the network, making sure that Bitcoin stays viable is something that's in their vested interest as a company that's acquiring Bitcoin. So yeah, you're right. At some point, they're going to have to take a stand. It's just a matter of how that's, brought to the market in terms of communication, in terms of what exactly are they going to do. Is it just going to be running nodes? Is it going to be through taking a more active role, or like how is it going to look? So I really think that that's something that's going to have to be thought through. But strategy, anything that they do, is going to have a huge footprint. So I think that they're going to have to be very careful of what they go to the market with in terms of how they want to be stewards in the network as a peer as one of the largest peers in the network.
Yeah, that does make sense. We don't have to beat that one to death, but so Jesse actually had a suggestion, and of course he didn't show up to defend his position, but he was talking about some of these companies that are like investing in each other's offerings, and is that fair play, or is that should all of your own company's money just be plowed into your own offerings? Like, should Bitcoin treasury companies be participating in each other's capital raises, or is that a no-no?
I don't think it's like insider trading. Obviously, it goes to show you there's value in networking and being connected. But yeah, that's all I have to say on that.
Yeah, I mean, every time we get off zero, we're joining the Bitcoin network, and every time a Bitcoin treasury company gets off zero, they're joining like a kind of like a we're all in it together kind of thing. And Saylor's always tweeting, hey, this company bought Bitcoin, this other company bought Bitcoin. But is that like I don't know, is that not quite a vote of confidence in your own company if you're giving other companies capital instead of buying Bitcoin with your own capital? Or am I not understanding how these capital raises work?
No, I don't think that's what it is. I think that we are so used to an adversarial model that we have a hard time adopting or accepting rather a cooperative model. If these companies adopt Bitcoin and more companies adopt Bitcoin, that's good for Bitcoin. So in a way, they all have a vested interest in their mutual survival. So I think that it's creating different dynamics in the market as to why you're seeing that more companies are willing to invest in each other and push them towards success. Like with Saylor retweeting all these companies when they buy Bitcoin and whatnot, he's being an advocate for these companies because their success and Bitcoin's success is in his best interests. So I think it creates a self-interested cooperative model that we're having, that we're going through the reconciliation process with and coming to terms with. In a true adversarial, purely capitalistic model, no, that's not what they should be doing. But in a more cooperative model where Bitcoin is a network and they say Bitcoin is a movement and Bitcoin is this and this and that, it does create more of a cooperative model, perhaps, with regards to the sharing of capital and how capital is allocated. And we may be just seeing that.
Yeah, if I was in charge, I'd be tempted to sell cash secured puts against strategy and then buy Bitcoin with that. That might work out.
I mean, you could do that. That there's nothing against it to say with you doing that. But I'm just saying that I think we're seeing more of a cooperative model where your success is my success taking place, and we're seeing the natural output of that. Whether that's good or bad, I don't know, man. I'm just saying what I think could be playing into it.
Yeah. So, I mean, that's all I've got on the agenda. This might be a quick one, unless you guys got other things that you want to talk about. Dan, did you bring anything for the press, or did you get all of that off your chest?
Let's just talk about whatever else we need to talk about, and I can talk about the press for a second.
You said, and you can talk about what?
Yeah, I can mention the prefs. I don't have much more besides volume and some theoretical ideas.
Okay.
Go ahead, share them.
Yeah, go ahead and share them. The only thing that I put in section 5 is we got feds on the streets. So this may be your Bitcoin use case. Get your seed phrase ready in case you got to dip out of the country and or get out of your little communist hellhole of a city that you're living in, and get your shit hits the fan plan ready. Does it get any more bearish than that? I'm bullish on Bitcoin, but I'm bearish on I'm bearish on the fourth turning, I guess. So get your preps ready.
Get your preps ready. I like that, Soleil.
You ready to share, Dan?
I think I covered most of it. I think the prefs are I think the prefs are the full story. I know people don't want to talk about them, but that's the future. Right now, that's the business model. I mean, before the prefs, it was kind of managing the leverage ratio. What is a convert? What is BTC yield? What's the development been over the past few years, right? First, it was, okay, are they over leveraged? Can they cover their liabilities with their cash flows? Are the converts a form of leverage? Are they senior in the capital structure? What does that leverage garner? Like, what kind of multiple is a fair assumption there? Then we moved into this, okay, what is equity issuance? And is it a sort of accretive mechanism for shareholders? We figured that out. So I think it's cool. We've gone through this like learning journey. And then we saw the first issuances of the pref over this winter, and we started figuring out, okay, what is a pref? What is a liability that never comes due? Now we're trying to figure out what is BTC per share if a liquidation preference exists. Is the liquidation preference a superior claim over the assets, or is that not even really leveraged? Considering that all of these prefs never come due, what is the liability? Is the liability the total market cap of all the prefs, or is the liability the annual dividend payments on the actual pref? And I don't know how to quantify that in terms of BTC per share necessarily, but that has a huge impact on mNAV, right? If the outstanding prefs represent 30 or 40% of the total value NAV of Strategy's Bitcoin, then the BTC per share will be calculated, one, based on the total NAV of the Bitcoin divided by the total outstanding shares, or total outstanding shares divided by the NAV, or it will be calculated, two, by taking the total NAV, subtracting out the total market cap of all the prefs, which represent a liquidation preference, and then having that be the representative BTC per share, per fully diluted common stock. So I don't know how they're going to value that BTC per share moving forward. I think that's a really tough or interesting kind of next step for figuring out how these things are valued, because that's ultimately what we've been trying to do at MSTR True North the past year, is understand how to value MSTR, how to value a Bitcoin equity, how to value these sorts of things. And the pieces are moving and shaking as we go.
Yeah. And some of the things don't fit in a spreadsheet, right? I mean, I'm going back to the authenticity thing, but how do you measure like authenticity per share? You know what I mean? Because you've got companies that have been doing it longer, right? Strategy's been doing it the longest. They've got the longest track record. You've got Metaplanet that's been executing well, but you've got some of these other companies that might even be just like hyping their own stock and potentially over leveraging, encumbering their Bitcoin, maybe desperate to raise capital and doing some things that they shouldn't be doing. So I agree with you, though. We have to figure out a way to measure those things. And I think that the market really figured out that the EPS doesn't matter for Strategy's earnings, because Q1, we had a huge miss, right? It was because Bitcoin was down, and it was like all billions of below expectations, and the market didn't care. Strategy's price didn't really go down. And then Q2, we had that massive gain, which should qualify them to at least be considered for S&P 500 inclusion. But again, the market just didn't give a damn, right? So I think that the market is probably calculating in the same things that you're calculating, Dan, and saying like, here's what they did this quarter, because we know we're not going to give them credit for all the Bitcoin that they put on their balance sheet last year. Like we want to know, okay, what was your Bitcoin accumulation this quarter, or what was your BTC and dollar gain this quarter? So I don't maybe we were wondering if the market was going to be fooled, and they weren't. I think it was just all kind of expected, really.
Hey, Dan, or anyone, I got something for you. if I'm not interrupting, Soleil.
No. Go for it.
I posted maybe an hour ago. There was a clip and then a whole thing with Joe Burnett, and the takeaway was basically he was saying that this intelligent leverage, like the leverage ratio, right, 20 to 30%, or if it's all prefs, maybe 30 to 50%, could create massive tailwinds for the price of Bitcoin as it kind of ratchets up. And I didn't know if you had a view on that, or even like the mechanics of it, right? Like the flywheel of like the price goes up, your leverage ratio goes down. So then you got to like, it just like, how much merit do you put to that statement? Or
I mean, it's a great point, right? Is the price of Bitcoin goes up significantly to maintain a consistent leverage ratio, there has to be consistent bid on Bitcoin. They have to be buying more Bitcoin through issuing more securities or debt. So, right, like if you have a 10% leverage ratio, Bitcoin goes up double. You now have a 5% leverage ratio. You need to issue 5% of your Bitcoin stack. You need to buy 5% of your Bitcoin stack debt. That debt is through fixed income issuance across the board, whether that be prefs or convertible notes or just straight debt in the case of the planet, right? So yeah, it holds merit, but there comes a point where Bitcoin gets high enough, and yeah, that holds merit. But there comes a point where if Bitcoin's at 300 or 400,000 in 6 months, you can't be holding a 30% leverage ratio. Like, you just can't do that. The vol ticks up to 30, 40, 50% on BTC. You can't hold a 30, 40% leverage ratio. You just can't do that in good faith. So I think theoretically and over a really long period of time, everything you're saying, Tim, 100% correct. I think in the short term, you can't lever up crazy during a rally.
got it.
Yeah, I mean, his point's well taken over 5 years.
Well, I think we made it all the way through the agenda. You guys want to go around and do final thoughts? You want to start with you, Adrian? Anything you want to close us out with?
Sure. I think that Bitcoin just hit an all-time high today of over 124. What was it? Whatever it was. Oh, Hunter Jeff's here, so I can drop off. But yeah, Bitcoin's going to rip. We're going to be fine. Everything's going to be fine. Just zoom out and relax.
We're cooking.
Okay, only bull posting from now on. Jeff's on. Thanks, Adrian. Appreciate you.
Jeff shows up and Adrian's like, "That's it. I'm out."
That's it.
I mean, I can stay, but I got nothing else to say. So yeah, for sure. Jeff's here. I'll bounce out, and everyone just needs to chill.
Peace,
You
Adrian.
made it just in time, Jeff. I was going to close it out early.
You're going to close it early, 8:14. You got Dan coming in talking just a bunch of bearish stuff about STRF and liquidation preferences. And
I said nothing bearish on the stream, Jeff. I said nothing bearish on the stream.
It's only the tweets, Dan. Yeah,
but the tweets aren't meant to be bearish. they're literally a stream of thought.
It's stream of.
Yeah, I don't know.
Yeah, I appreciate it.
I'm not.
I appreciate it. I like your ARB perspective. You're like, okay, well, hold on. There's credits. I like how you're putting it all together. You're thinking like an algo, where you're identifying these different like opportunities to move in between all of these different assets based on how they're going to move in any one direction. It was kind of that like Pentagon thing that I put together,
right?
Where you can ARB all of them because each is going to have its own individual like risk relativity relative to like the premium of MSTR or all of these different components intertwined, moving together.
And they all lay claim.
It's gonna be nuts.
They all technically are some form of claim of the underlying asset. It's a homogeneous underlying asset.
Yeah,
which is a really interesting concept. Like when you look at when you look at a traditional equity, right? A common share represents a claim over future cash flows or current cash flows, or in the case of liquidation, the actual liabilities of the company, what's left after the common debtors, after the debtors have been paid. In the case of MSTR, the common represents a future claim over the assets at some point in the future, because there isn't the cash flow per se for the common equity, right? Like it's a future expectation of yield or accretion or generative capabilities from the Bitcoin. So that is actually very similar to what a STRF claim may be a STRF claim, effectively a fixed claim over the Bitcoin, but with no expectation of future yield on the Bitcoin, right? So that's different.
Yeah, fixed claim on the Bitcoin. It's in the event of liquidation, though.
Exactly, but it's a claim over a fixed USD value of the Bitcoin. That's what it is, right? Senior claim over the assets of the corporation. Period. Full stop. In the case of liquidation.
Right. Yeah, and this is the question I posed to you a little bit earlier, and I'm curious how, if you've mulled on it a little bit. It's like, what's the probability that strategy gets liquidated or bankrupt, and the Bitcoin's worth anything, and the STRF holders, get anything, right? Yeah, no, and that's.
But would you say, like, so I think the real question is, when you calculate BTC per share, would you divide all of the shares by the total NAV of the Bitcoin, or the total NAV of the Bitcoin minus the liquidation preference of all the prefs?
For what?
when you're trying to calculate the Bitcoin per share.
I'm trying to calculate the Bitcoin per share
of the common.
I'm following.
That is the only fucking metric we use to value the stock, or not the only metric, but that's a key factor, right? Like I think that's a big deal personally, but maybe I'm overthinking it.
So your Bitcoin per share backing out the relative claim of the liquidation value at issuance for each of the preferred equities, and its component of that?
No, it's just I'm doing a terrible job explaining. I'm sorry, but like prior.
I need math. If you put it on the screen.
Let's just say prefs don't exist. There's converts. When we calculated Bitcoin per share, we took the total outstanding fully diluted market cap, and we divided it by the USD value, or we divided it by the number of Bitcoins held minus the liabilities, right?
Yeah, we looked at it a few different ways because there's, the converts can convert into different tranches of equity, right? It's convertible to equity into different, and that equity can change over time depending on what the underlying is and all of that. So we looked at it fully diluted and non-fully diluted.
Okay. So in the case of the that's totally okay. But in the case of the prefs, I guess you wouldn't subtract out the perpetual liquidation preference. That wouldn't be considered. So you divide the total fully diluted market cap by the total number of Bitcoins, not subtracting out the portion that is represented by the liquidation preference. That would be how you calculate the fair value of Bitcoin per share, because the perpetuals never come due. That would be in line.
And the reason you would do that is because that gives you some better underlying risk metric of the pref. I'm just trying to wrap my head around.
I'm just curious what the pref, like, is the pref liquidation, as people say, according to GAAP accounting measures, the liquidation preference for the total market cap of the pref isn't a liability. So that increases the theoretical Bitcoin per share for the common stockholder. But if you consider the total market cap of the liquidation preference as a liability, there's a lower Bitcoin per share for common holders. So that's something I've been trying to figure out in my head. How do you calculate? How do you consider that?
But it kind of comes back to the original question. It's only a liability if there's a liquidation, and if there's liquidation, then the stock is probably worthless. I don't know. I just see this whole thing as binary.
No, I think that's a great point. But then you could use that argument for 100% leverage ratio.
Right. I think that's the question. It's like, how high can you crank this thing? I think that's a really good question.
I don't think it would be good to have 100% leverage ratio.
Well, the leverage is the leverage. Really, your leverage ratio should be a function of the dividend payment of the preferred, not necessarily the.
No, it's just there.
Right, because even if you levered it to 100%, let's go crazy here. Even if you levered this puppy to 100%, technically, how we've been calculating leverage in the past, and you got $77 billion of capital.
Yeah.
$77 billion of capital, $77 billion of debt, and let's just say at 10% interest to make the number simple.
Perfect. Yeah.
Then you've got $7 billion of dividend liability annually.
Right, which comes out of the common, but it's essentially a 20% CAGR ARB.
Right. And that so you'd have your real liability is your annual liability, and you're arbing. It's funny you bring up this CAGR ARB because I did a little bit of math. Maybe I'll share my screen, Soleil, if you'll let me here.
Mm-hmm.
I'm trying to wrap my head around this a little bit further as well. Oh shoot, I gotta make it bigger. And I disregard this over here. I'm just trying to like think of how to put this in perspective, because I feel like a lot of people aren't really understanding how, like, they're not seeing the ARB, and they're not seeing the ARB from the math, I think. So I just wanted to put this into perspective here. The STRF price, $117, dividend per share, $8. Is it 8? It's 10. Let's just say it's 10. Make it equal. Quarterly dividend per share is $2.50. The initial rate paid on this is 8.5% relative to $117. So I used an incredibly conservative BTC CAGR assumption here, 25%. So it brings us to a quarterly CAGR assumption of 6%. That's right. So your ARB, your CAGR ARB is 16%. So I just walked through the math to put this into perspective. So let's say they issue a share of STRF at $117. You're going to go buy strategy is going to go buy $117 worth of Bitcoin. Maybe less fees. Maybe it's $116. We can argue over this. The dividend that they're going to pay, and maybe I'll make this so you can see it. The dividend they're going to pay is $2.50. The net Bitcoin that they would have, let's just say forget additional capital raise. Okay, forget additional capital raise completely, and let's just say, what if they just sold the Bitcoin to pay this off? Okay, which I think is a good. It's helpful to wrap your head around the math here. Is if they just sold the Bitcoin to pay this off. Okay, so Bitcoin price $117. You got a quarterly dividend paid of $2.50. The net Bitcoin you'd have after that would be $115. Now that $115 is going to compound at 6% quarterly. So next quarter, it's going to be worth $122. But you got to pay out another $2.50 dividend. And the net Bitcoin you'd have at that point is $119. Now, from that issuance, $117, at the end of this period, these 2 quarters, you'd actually have $119 worth of Bitcoin. You paid out $5. So you technically would have made $2 in these 2 quarters on that individual single transaction. So that's being counted as like this net income. I guess the argument is this net income, and I think it should be calculated as net income. How does that factor into revenue? Can you discount what the ARB is over time back to a certain point in time, like today, and get to a like proxy revenue figure, calculating the benefit of this ARB in day one? And I think that might be an interesting concept to just walk through.
But then wouldn't MSTR pop to a multiple and then trade flat into perpetuity?
See, I kind of caught you catching this or talking about this in the earlier. Say that one more time, Dan.
If you believe MSTR's price should reflect the future leverage income based on a CAGR ARB, then the premium should pop, price it all in, and then MSTR should trade flat until Bitcoin reaches its terminal CAGR.
I think that is an argument that you can make. It's like you like what is Bitcoin's terminal CAGR? Until fiat goes to zero. Like how forward looking does the market look?
Right.
Is the market capturing this? And like, how do you value a company? Are you going to value a company at less than the value of the assets on its balance sheet? No. And how do you value a company that's increasing in financial strength so quickly? Like, this company started with $500 million 5 years ago, and they're holding $77 billion. Like, that is insane. That is insane. And as to use Soleil's word, this is as least efficient as they will ever be. Like, so what is that worth?
Bitcoin yield, but in terms of actual capital
Well, in Bitcoin yield relative to every other company trying to do the same thing.
Yeah, I agree with that 100%.
So yeah, I mean, as Bitcoin gets so expensive that it's hard for everyone to just scrape two sats together, that's somewhat true. But strategy has the most effective tools to be able to do it better than anyone.
Totally. But effectively,
Soleil,
it's reflecting.
Soleil, do you have your mic?
It's shit.
Oh,
It's a shit show over here.
okay.
But isn't it? But effectively, what it comes down to is leverage on the balance sheet. Like that's where it all boils down to. Because we can talk about the actual CAGR ARB there, but what it is leverage, right? Like the idea of paying 9% to buy Bitcoin and hold it, which is compounding at 30%, is leverage. So it all comes back down to this idea of leverage on the balance sheet and what premium are you willing to pay because of how forward looking do you think the Bitcoin price or the market is.
Yes, and I agree with that. It comes down to leverage. You got to leverage the balance sheet. There's got to be future operations, which we know that they're doing, right? They've just launched 4 new perpetual preferred products in the last 6 months, which is crazy. And now they have the ability to tap debt capital at a click of a button and a phone call. Like they've never been able to do that before.
Right.
Like we don't know what this is going to look like down the road because we've never seen anything like this before. Name another time in history where somebody's able to tap debt capital at the click of a button. Infinite perpetual debt capital at a click of a button.
No, it's super interesting.
Like it hasn't happened before. It hasn't happened before. So the I really like the framework that you're working through here, Dan. I think it's really valuable, and I love the stream of consciousness that you've got comparing the prefs and bouncing between these. Like, keep it going. Like, your headspace is in the right direction, and I think it's really good. Where this like whole thing, like this valuation concept, in my opinion, where it breaks down a little bit, is when you like put it next to its peers, not Bitcoin peers. It's other trading peers.
I agree with that. I don't think the market will do it like that in the short term, but I think you're totally spot on. All the other companies are heinously overvalued relative to Bitcoin and MSTR. Absolutely.
And that's why I hold this stock because I think there's an information asymmetry, and I question why do you hold like what? And I say this all the time, and I think it's a really good question. I encourage people to think about it. Like, why does anybody hold any stock? What's the purpose of this whole thing? Why are we here? Why is anybody buying any of these stocks?
To make money.
You want to make money. Like, everybody wants to make money. All right. Well, like, make money or for how long? Like, is it to make money and reduce risk?
That's
is it to
Bitcoin, I feel like.
Yeah, I think it's a similar argument for MSTR. Is like, okay, what's better, a strong balance sheet or some expectation of future cash flows? I think it's a similar concept, right? It's like if we talk about Bitcoin being an insurance policy against fiat currency debasement, then strategy that holds more insurance against fiat debasement than any other company on the planet. What's that worth?
A lot.
I think so. Is that able to withstand like market pressures that other companies aren't able to withstand? I think so. So I don't. That's just how I'm starting to like think through this, and I think the market has missed it, and they're wildly misunderstanding it and thinking this is a one-time. Like, I think I'm going back to the conversations that I'm having currently with capital providers, and then I've had over the last 24 months with people in very high financial positions that run, $1 billion companies, $500 million companies. They are blind to this stuff. And I think there's a point in time where you can't be blind to it anymore. Do I think that's now? No, I think that's probably within the next 4 years as Bitcoin rises to different thresholds, right? I think we breached. Bitcoin is now worth more than a car. At a future point in time, Bitcoin's going to be worth more than a house. And I think that between now and then, I don't think people are really going to get it until it's worth more than a house. And they'll be like, holy shit, this is worth more than like the median house price in the US is 420,000. And I think at that point, it's like, okay, wait, hold on. This is real. They're not even, forget nominal bias. They don't, like, most of the world doesn't even get market caps. Like, they don't even get it, but they see just a number. And I think even a lot of the financial world is just entrenched in that. They don't even know why they work. Gotta be honest. They don't know why they work. They don't know why they're doing what they're doing. I think everybody's in cruise control, doing things that they've done forever because that's the way things have been done, and their bosses have told them things have been done, and they've got to do things like that. So that's it. That's all I got. Dan, yeah, go ahead, Tim.
It's just a repeat from earlier, but Dan had a take on it, so I'm intrigued your take. Soleil's take. Anybody else who might randomly join the calls take. There was a clip today from Joe Burnett. He was being interviewed, and he basically said intelligent leverage could create massive tailwinds for the price of Bitcoin. He was kind of talking like, as the price runs up, right? If your leverage ratio is 20 to 30%, or with prefs 30 to 50%, it's like this flywheel where, right, if you want to keep that leverage ratio, even not right up against 30% or 50%, don't you by definition have to or want to with the business model keep buying Bitcoin, and maybe that doesn't send Bitcoin to the moon, but isn't that a flywheel in and of itself, or any thoughts on that?
Yeah, I think there is huge tailwinds with these companies doing this, and multiple companies doing this. And once you have multiple companies at scale, I mean, Metaplanet, started with like a $5 million hotel, and now they hold $1.5 billion of Bitcoin. Well, they're going to double it, and then they're going to double it again, and then they're going to double it again, and then all of a sudden they're going to have scale, and they're going to keep doing this, and they're going to be one of the strongest financial companies in the entire Japanese market. And that's happening all over the globe. We are at the beginning of a super mega trend here. This is a complete mega trend that I think a large portion of the world just hasn't conceptualized. Like, this is internet, right? This is adopting digital capital is as big as the internet, and all of these companies buying Bitcoin with their excess cash flows and leveraging the capital markets to buy Bitcoin is huge. Like, it is tailwind in and of itself. So I agree with Joe there. And once you're in a position like I've been recently to see things from behind the curtain, as Joe has probably at this point now too, you start to realize the gravitas of the situation. Like, this is a really big deal. Like, I know a lot of people are just wheeling and dealing and shit posting and doing memes and everything, but this is a really big deal. Like, the companies that are managing billions of dollars of capital and doing this, like, for real, you got to be a really serious person. Like Sailor and the entire capital team over there, incredibly serious, incredibly dialed in, absolute nails. Same with Metaplanet. Simon is a stone cold killer. Dylan is one of the brightest people I've ever met. And the people that are operating in this space are dead serious. We're going to take over the world. Like, this is where we're putting our energy towards and how we're trying to move the world forward. So yeah, it's I think tailwinds is a great word for it, but it becomes really real really quick.
You're just giving me a great tweet. It's like digital capital is as big as the internet, and it's riding on the internet.
yeah, it's huge. I mean, this whole thing is huge. Dan, go ahead, Soleil.
I was just going to say you missed 90% of the agenda, but if you want to talk about Tim's building a digital empire over here with his marathons and his unconferences and all of that stuff, or just whatever you want to talk about, it's your show anyway.
Yeah. Soleil, thanks for jumping in. I've had a crazy fiat week. yesterday I was in a car 10 hours yesterday because my house was broken into, and they had stolen an air conditioner, and there's a whole it was a whole ordeal. So I'm like super anti real estate at the moment, and just like, there's so many problems in this world that need to be solved, and I just can like see Bitcoin solving a lot of things in the future. So I'm pretty bullish on that. So thank you for taking the reins here at the beginning, and just so I could get a couple things done. And yeah, Tim, you're doing it. I look forward to seeing everybody at the Unconferenced in September. Almost about a month out now.
True North 15.
Right on.
Coupon code True North 15.
True North 15 for the coupon code. Yeah, it'll be great. It'll be a great time. Midtown Manhattan's cool. It's a great time of year to be in New York. It's going to be super buzzy. I think the market's going to be ramping back up just in general. If you look at just liquidity, like volume and liquidity, a lot of people are making a ton of noise and complaining about MSTR right now, which I think is justified if you think it's 100% correlated to Bitcoin, which it's not. It hasn't been historically. And if you look at just historical trends in the equity market, like all the money managers are out touching grass and doing things. Just like Josh Mandel was posting pictures on a boat the other day, like everybody's out doing that. August is historically the lowest month of trading volume across all indices and NYSE, NASDAQ, et cetera. And like that data is very apparent. And the biggest month historically for all trading volume is October. And we're going into September and October, which are really big trading months. So yeah, I'm bulled up. I'm excited here. Would I prefer that MSTR was trading at all-time highs when Bitcoin was trading at all-time highs? Absolutely. But at the end of the day, like nothing in the thesis has changed. We're sitting on, what is this? I actually just updated this right before this. The Bitcoin gain through Q3, 45 days through Q3 at 123,500. Strategy is sitting on a $9.6 billion Bitcoin gain through Q3. So these are just insane numbers. And if we see Bitcoin go even higher, right, another $25,000, a lot of people are calling for 150K, right? If Bitcoin goes to 150K, Strategy is going to make $26.2 billion on the Bitcoin gain on their balance sheet, which is just astronomical numbers. And if they make $26 billion, they're at that point, they're holding over $100 billion of this asset, and their ability to continue to leverage that. Like the story just gets better and better and better the stronger that Strategy gets here, because they're able to raise more capital, put on more leverage. The credit quality of the instruments get better. They're probably going to issue more prefs. They're going to have more of these products out to the market. They're going to be in talking to all the credit rating agencies. You've got a plethora of these other companies coming out and offering perpetual preferred securities that the credit rating agencies will be able to rate against. Stretch is, use case. We haven't seen it yet. It's approaching 100, but it's getting close. And there's so many things to be like bullish about right now. It's just crazy that how bearish the community is. And I'm also just surprised that people bash the stock. And I think there's a ton more bots out there than people realize. A ton of people are bashing the stock. And it's like, well, if you hold the stock, what are you doing? Like sentiment bots are out there scraping all this data and information.
I love that post from you today. I was like, that makes a lot of sense. Like,
yeah, I mean, if you had listening about this, if you had $1 billion short position on Strategy, 500 million, how much would you be willing to pay for bots to FUD your position? Like how much does $1 million get you in bots? Short bots, bear bots. Maybe that's a new bear. We need bear bots. Quite a bit. And as the company gets larger and larger, I mean, you saw it with this freaking interview from Lynn Alden and Andy Constant. Oh my God. Like these are the people that are trading against the stock. They're short selling. They have the people in power with money that have the stock, that have the same perspective as Andy Constant, are shorting the stock. So just keep that in mind. Like these people, they have no incentive to be long. I don't know. That's all I got.
Quick housekeeping note for people in the comments. They keep thinking that I'm raising my hand because I want to say something, but I'm just saying
it's just going higher.
It's just going higher. That's all. That's all I'm trying to say.
It's like, yeah, I mean, think about how powerful this company is. This company has $77 billion. What is that? Is that $7,700 million homes? So think about like a neighborhood that's got a neighborhood of 7,700 homes, and they're all $1 million homes. That's like, try to think of how big that is. And that's how much money that strategy holds digitally in their wallets. Right? That's just so much money. To try to put it in scale, it's just hard to fathom. And the world's waking up to that.
Yeah, I forget who was saying it within the last week. It's like, maybe it was yesterday, right? Kind of a blur at this point, but someone was like, when we're buying $10 million worth of Bitcoin, $20 million worth of Bitcoin, it's like, and you're actually seeing wires move. It's like, wow, that's a lot of money. But then you have Sailor. He's like, we bought $2.5 billion worth of Bitcoin. Like, that's actual cash that, yeah, digitally, but like it's moving around. That's nuts. Like I think about, right, for a lot of people, if they buy $100 worth of Bitcoin, my friends are like, what the heck are you doing? Why are you buying so much Bitcoin?
Yeah, just the fact that somebody can go raise $2.5 billion in like a week, like that's all the signal you need. Right? People are bearish on this, and they just raised $2.5 billion like a couple of weeks ago. Like that's so enormous. What is that? That's $100 million, 250 times. Do you know how hard it is to raise $100 million? It's so incredibly hard. And they just did it 250 times a couple of weeks ago, and it took like 5 days. Like that's signal. That is signal. People that are concerned about, decoupling for, the last 4 trading hours or, whatever it may be. I don't know what to tell you. You probably don't have enough Bitcoin if that's the case. If you're complaining about this, you probably don't have enough Bitcoin. And if that's the case, you should probably not hold MSTR to begin with. I don't know. How I view my life, I see Bitcoin as like my pure savings. I'm continuously adding to it constantly. But I also hold a very large MSTR position that I'm long. I'm not like I'm long both of them, and they both like help each other. So it's not an either or for me. I think a lot of people think it's either or.
Yeah. You think
I don't know, Dan, how do you feel? How do you feel about this? Like you spot Bitcoin for you. Like, I'm curious your take. Do you hold spot Bitcoin?
Yeah, I hold right now 80% of the port in spot Bitcoin.
IBIT or spot Bitcoin?
50-50.
50-50. Okay. 80% of the port. What happened to the December 380s?
I dumped them all 3 weeks ago.
You dumped them all 3 weeks ago.
Yeah.
All right, so we can blame Dan for the decoupling. He dumped all his 380s, so removed all that.
I'm not a whale. But no, I think IBIT serves a like
back in the day.
There's different people are looking for different things. Obviously, if you're looking for beta on Bitcoin, then a levered IBIT, answers that question for you. If you're looking for a long-term accretive stock that derives value from Bitcoin as pristine collateral, then MSTR is for you. So they're two different things, and I think people are getting that confused in your head. And I had to allocate myself to my levered beta on Bitcoin. I needed that. Everyone needs, not everyone. I needed that. So I have that. I also have my MSTR. That's a different play. The MSTR is a different play. And as long as you don't think in your head that the MSTR has to be levered BTC beta, then you can hold it for the long term. And in the past, it has traded like beta, right? Beta is just levered performance on BTC. And I think that's something people are having trouble with. I get that. I mean, I totally get that. As a trader in the fall last year, all that thing, all the time. I mean, MSTR was in lockstep with BTC on the way up, way down, right? You were getting 2x outperformance on the upside, 2x outperformance on the downside over a few over like, whatever, short time frames.
Probably like 4x and even higher.
Exactly.
Yeah,
It went up, and it was pretty guaranteed that there was someone in the market arbing that difference. Obviously, that's decoupled a bit over the past few months, and I think so. That's why people are getting a little nervous. I mean, I get that. Like, a lot of people were buying MSTR for that levered beta, and if it doesn't perform like that, you need to find an alternative vehicle.
Yeah. And there's so much opportunity cost in the market right now too. And there's alternative Bitcoin treasury companies that are popping up left and right. I know for a fact that people are YOLOing ETH treasury companies now at this point as well. And the market structure's changed a bit, which I think was what you're getting to. And you think about what does a future market cycle look like as well? And this is like, this kind of gets down to, Dan, different perspectives of like, why do you hold an equity? You hold an equity for different reasons than I hold an equity. And I hold an equity for different reasons than Soleil holds an equity, and different reasons than Tim holds an equity. And that's okay. But you have to know why you hold your equity and what's the point? What's the point? What's the point of this whole thing?
Yeah, I got a question, because after the euphoria in November, I finally went hardcore and convinced some family and friends to get some strategy exposure. And so then, so they're in at 400 a share. So I'm just desperate for the price to just put them in profit. You know what I mean? Because I feel like an asshole.
Yeah.
But now that you're managing people's money, Dan, has that informed your outlook at all? Has it changed
risk?
Yeah, has it changed your outlook in general? Because, for me, even just feeling like I was a little bit responsible for other people taking this position, it gave me a way more vested interest in seeing that number go up. So I wasn't sure what it's been like for you now that you're managing money yourself.
I mean, yeah, it heightens your. I mean, if your mandate is to outperform Bitcoin, you can't underperform it over really a week, 2 weeks, 3 weeks, 4 weeks, especially. You can't underperform it. That's not going to fly. So, yeah, I think it's definitely changed my outlook quite significantly. If you get Bitcoin right, but you get MSTR wrong, how do you turn to the people's whom money you're managing and explain that to them? You can't do that. I couldn't do that.
Yeah, because they could have just plowed into Bitcoin, right? Because they're expecting a Bitcoin is the hurdle rate, so they're expecting extra, right?
Right. I mean,
obviously, it's a tough question.
With the position, in the fund, I mean, we hold a spot MSTR position of the outside money we're managing. Yeah, 100%. But it's not a crazy portion of it. And it's sure as hell not all our beta exposure on BTC. It can't be if it's not going to perform like that, right? There was a time when it could be the majority of your beta exposure to BTC, but it can't be anymore.
Why can't it be anymore?
Because it doesn't behave like beta on BTC.
On what horizon? Just the recent horizon?
7 months.
7 months. Okay, so since capital plan, do you think that changes? Do you think recent mNAV guidance changes that?
And that's obviously my job, and anyone who's trying to allocate in a portfolio, it's their job to figure out if it turns into beta, or if do we get a free mNAV expansion to 2.5 from here? That would be sweet. And if that was the case, you lever up on MSTR. Did the management's guidance on mNAV just give us a free 60%?
Yeah, right. It's a good question.
I don't think it did.
Yeah. We'll see. I mean, time will tell, right? I mean, this is you're right to say that the company's in a completely different position than it was 12 months ago. 12 months ago, Strategy held 150,000 Bitcoin. Now they hold 600,000 Bitcoin. It's a different game in size and scale. Different capital is coming in the door. In order to keep that capital coming in the door, you've got to do things to continue that capital coming in the door. And I think they're doing that with the prefs.
Prefs are huge. I mean,
they're huge.
I'm the first to say
they're huge. So like time will tell, right? I'm not personally. I'm long both, right? I'm long Bitcoin. I'm long MSTR, but
same here.
Just structurally, I don't see how it wouldn't get that beta back. Just structurally, like long term, just structurally looking at just how the equity market's designed. And even if like just because that concept of like as the market cap rises, like that doesn't matter like what anything else happens. Like as the market cap rises, you're getting this increasing. It's not even like linear increasing. It's the increasing at an increasing rate passive flows.
You're totally right.
And that's like, to me, it's like I don't. You look at one thing that's interesting. If you look at I did this analysis like a week or two ago. If you look at the price to book value of like the 493 S&P 500 stocks non-Mag 7, price to book ratios are like 2. But if you look at the price to book ratios of maybe it's top 15 stocks, price to book ratios are egregious, like 60, 30, 40, 50, 60. And they lack rationality. And I think strategy is going to approach that zone.
MNAV,
what's that?
You're saying 30 mNAV?
I'm not saying it's going to go to 30. It could. I mean, if that happens, we're talking about strategy is going to be like pulling in tons of capital in the door, and this thing speeds up, goes faster. But
30 mNAV, Bitcoin's at $1 million in like 4 seconds.
Yeah, it's fast. It goes because they're going to raise so much capital, and like it's. Tim is yelling, but he's on mute. I love it.
J64, that's the clip right there.
I agree, but I like to compare the mNAV to traditional commodity stocks plus some digital premium, especially yield premium. Like if you look historically, commodity stocks, oil stocks, particularly trade at a 1 to 2 NAV, but they have single digit annual yields depending on where you kind of are in the commodity cycle, and the commodities aren't necessarily on an upward 30% CAGR trajectory. So that would mean you'd place a much higher price to book value on something like MSTR than a commodity stock.
Yeah,
that's all fair and well, and a good way to kind of mentally frame it.
Yeah, and I think back to like, and I haven't done this research, but this might be a good research report for somebody, is to look at how the stock market has changed over time, like with the creation of like Exxon and Chevron and Shell, like all the oil companies. Oil used to be the most valuable commodity on the planet. Now it's digital intelligence, right? It was oil, then it was data and information. Now it's digital intelligence. And in my opinion, I think it's going digital capital, or digital capital is going to be right up there next to digital intelligence. Like these are the most valuable commodities on the planet, and they've changed, right? Like over time, oil used to be like the top 5 companies in the stock market used to be oil companies, and then it shifted tech, and AI, and then it was like oil tech, and now it's like all tech. And Exxon is number like 15 or 16. Still a really valuable company, but it's lost all of the excess value multiple that it used to have relative to the other companies. So
that's why I'm here.
Because of oil. Oh yeah, that is why you're here, Tim.
I'm here in Bitcoin because oil's no longer what it was. Yeah.
Right. So there was probably a point in time, like in the old stock market, before oil started becoming a very crucial commodity on the planet, where people probably said the same thing about Exxon and Chevron and BP and all of those before they became conglomerates. And then people are like, well, I'm just going to buy that. I'm just going to buy the company that has the most oil because this is the most valuable commodity on the planet. Right now, people are buying the company that has the, the most, the corner on AI or artificial intelligence, like NVIDIA. Like everybody says, I even see it in the comments, like, oh, these people sell stuff. It's like, well, I guarantee everybody in the comments, like probably maybe unless they have their own individual, like NVIDIA, like under the table computers, you're probably not interfacing with NVIDIA really at all. And it's like mostly corporations and companies that are interfacing with NVIDIA, and you're interfacing with the product that ChatGPT and, all these other companies create. So I don't know. It's just how I view the world. I think it's changing. Could be wrong. I don't think so, though.
It's changing.
We'll see.
Rearranging.
Yeah.
Guys, I'm white. It's time to keep bear.
Yeah. I don't think you're bearish, Dan. Keep speaking your mind, but I'm going to challenge you on some stuff for sure.
Next time we can get into strife more.
Dan, I look forward to sharing a couple beers in New York in a couple weeks, and maybe we can battle. Maybe we can battle live in front of people or something.
Jeff, I think you'll take the cake. I'll just tweet.
I love it.
Talk to me, and I'll tweet in response.
I'll tweet in
response while we're talking. Hunter Jeff doesn't know he's talking.
Tim will sell pay-per-view to that live.
Yeah, I was just gonna say I'll let Ed know we need Jeff and Dan up on stage.
Well, he bailed on me on the Portland thing, so Mason and I had to do it live.
I had something important to do.
Sure. All right.
But, Metaplanet prefs too. Glad we got that in there.
That's going to be cool, man. It is going to be cool. These things are going to be everywhere.
Do you think they're going to do moving liquidation preference?
Yeah, because I think, and we've talked about this, I think it's a function of issuing ATM. Maybe it's different. It's probably different in Japan, but like in the US, the moving liquidation preference is a solution to a technical problem that is a function of like how taxes are issued relative to when they issue new shares of the stuff. So I think it's like it's got to float as a function of some tax rule. I can get more information.
I didn't know that. That's cool. Yeah, let's talk about that later off stream.
Yeah.
And so the moving liquidation preference is a
technical solution to a technical problem.
And that
because which is why I float that idea by you is like, what's the value of STRF if MSTR is liquidated? And the answer is
if STRF starts getting bid up.
Why would it get bid up if the value of the Bitcoin goes down?
Because you have a higher claim over the Bitcoin. What is the difference between MSTR Common and Strife?
What is the difference between MSTR Common and Strife? MSTR Common has got the junior claim on assets, and Strife has a senior claim on assets, no voting rights, and an $8 or $10 per share dividend annually.
And they both are technically a moving liquidation preference security.
I guess technically both of them.
So which one would you own?
I want the one that's got more upside.
Right. But like, if you didn't think
this thing's binary to me.
No, that's the thing that keeps me up tonight. That's all I'm saying. I'm just posting it.
Yeah.
I don't think I own MSTR. Well, MSTR. I don't own MSTR. But I'm just saying, you have two equities that represent a claim over the assets. Do you take the senior one with the moving liquidation? This is all crazy theory. This is all crazy.
Yeah.
It's completely nonsense. But I'm just using it as like a sort of like.
I just think it's binary. Is what I'm saying. I just think it's binary. If Bitcoin is valuable, MSTR doesn't get liquidated. It all moons. If Bitcoin's not valuable,
let's just say, yeah. No, you're right.
It's zero. It's zero. So if Bitcoin is worth zero, Strife is worth zero. Liquidation preference goes to 100, which is the floor.
What if I buy all the Strife tomorrow?
What if you buy all the Strife tomorrow?
Yeah, what happens?
I'm okay. Why? Where are you going with this?
So I buy all the Strife tomorrow. It's 5x's in value. I now have a senior claim to 30% of Strategy's Bitcoin. And the Bitcoin per share has effectively been reduced for the common equity holder.
If you bought all the Strife tomorrow
and pump the liquidation preference, let's say a 5x liquidation preference, and
they would issue more.
Right. And I buy it and I buy it and I buy it and it keeps
so
going
it's a question. Do you have I don't know, $5 billion, $10 billion? Is there anybody that has $10 billion?
I don't have $10 billion. No, again, this is all weirdly theoretical. Like I'm not saying this is going to happen by any means, but I'm just saying if you bid up Strife enough, it seems to be counterproductive to or that's not the point I'm trying to make. The point I'm trying to make is what's the difference between a senior moving equity and a junior moving equity?
Okay, say it one more time.
So like a common equity is valuable because you can get a return on the future cash flows in the form of traditionally in the form of dividend payments or stock buybacks.
Mm-hmm.
And then in the case of liquidation, you have a junior claim over the assets upon liquidation. That's why a common equity is valuable. Plus you have shareholder voting rights. Those are the 4 reasons why a common equity is valuable, right?
Yep.
You're able to be returned cash in the form of future cash flows, buybacks, dividends for those reasons. Then why is debt valuable in a capital structure? The debt's valuable such that
Right? I think I have the answer to your question. Is the increasing Bitcoin per share for MSTR? What if there's a Bitcoin dividend in the future?
That would completely change everything. I'm saying.
So you can
that would invalidate every point I've made in all my Strife tweets.
So there is a Bitcoin dividend on every MSTR share. It's just automatically reinvested.
It would have to be paid out to shareholders, I think, to invalidate to quell the problem I'm having with it. Because if Strife goes up, if the price of Strife goes up, you technically get a same Bitcoin dividend because you now have more claim over Bitcoin.
No voting rights.
No voting rights. So yeah, that maybe the voting rights are valuable enough that MSTR common should. But if the price of my Strife goes up, Strife is one mNAV all day long. Period. See you later.
Yeah.
And if the price of my Strife goes up, I own more Bitcoin. That's more Bitcoin per share.
If the price of Strife goes up, it's more because of the floating liquidation preference.
Yeah, exactly.
That's what you're arguing is that because of the floating liquidation preference is going up, you're saying that you own more Bitcoin, but you don't.
Since you can't have Bitcoin returned by a straight Bitcoin dividend, then all we're talking about are the claim on the Bitcoin via these different assets.
Yeah.
So theoretically, the senior moving claim could, in a weird world, be senior to a moving junior claim. I don't know. I just thoughts. I spitballing.
Yeah, but even if you owned all of it, and the price of it like rockets, strategy's not getting liquidated. So how long are you going to hold it? You're just going to get ATM'd away, and they're going to raise capital and make them even stronger.
Totally. I mean,
you know what I mean? It's like then they're going to raise capital at a lower interest rate, and they're going to get even stronger.
Yeah, I think it's only a problem in a falling BTC environment, but in a rising BTC environment, it shouldn't matter. I think you're right.
So in a falling BTC environment, even then, if you owned all of it, there would have to be a situation where
I think the thing is, if the market saw this happening and BTC was falling, MSTR could trade it at a serious discount.
It could, but Strife would be a higher credit risk.
Yeah, exactly. I don't know.
So Strife would fall too.
That's what you would expect. That's what strategy expects. That's what everyone who created the security would expect. That's what traditional wisdom would say. I'm just saying there's a weird tail scenario in which maybe that doesn't.
Yeah, I get you. I think
put me in the loony bin. I'm just saying I can't get it out. I got it.
You're like sleeping on your pillow and you're just like you're seeing numbers.
Well, the thing that keeps me up is just what's the difference between MSTR and STRF? That's a question I keep having to ask myself.
Voting rights and how they're structured.
But what is how?
Anyway, let's do this another time. I like where we're at. It's too late. Let's go to bed. I gotta do a bunch of other stuff too.
I was gonna get to go to bed early, Jeff, but you know what I'm saying.
Sorry,
you had to jump on and run your mouth for an hour.
I have all these thoughts and I need an outlet.
Jeff, you saved the stream. You saved the stream. Glad always good to have
Saved by the punter bowl.
Yeah. Okay. Thank you. Well, it's been fun. Appreciate the time. Thank you for running this Soleil. I think I might have you occasionally pop on and do this. It's great to be here. Good stuff.
Yeah, I thought I had the mic stuff worked out, but I don't know, like as people joined, I think it started to tax the system or something. Like I had no mic problems, and then right before we went to live, it was like the gremlins came out of the system. So kind of.
Well, your mic sounds good now.
Yeah, I plugged it back in, but if I don't mute as soon as I stop talking, you'll get echo and feedback. So I've been playing that game the last 10 minutes.
Lovely. All right, fun stuff. All right.
Yeah.
Well, good. Final thoughts.
You want to do final thoughts?
Yeah. Final thoughts. I'm bullish here. I'm really excited about the future, and I'm telling you from behind the curtain, there's a lot to be excited about, and I think that the next 8 months are just going to be electric. So I'm excited to be here. I think digital capital is the way of the future, and I'm going to be working in this space for a long time. Come to Tim's thing in September, and I'm also going to Bitcoin Asia, and I'll be at a lot of these events coming up. So look forward to seeing everybody, meeting everybody in person, and I think it's a good time to be along.
Hell yeah, I've never been to Asia. That sounds fun.
It'll be a good time. Hong Kong.
Awesome, guys. It's been a good talk.
Thanks, Dan. You want to give out the coupon code again, Tim? Your final thoughts?
True North 15 for 15% off the Unconferenced. And I mean, you get to see Jeff and his dog right now. What's better than that? It's just right?
Yeah, my dog's tired. We got to go to bed.
All right, my final thoughts. The gains that strategy's gotten over the last 5 years, it's the least efficient that they will ever be. And me subbing for Jeff tonight, this was the least efficient that True North will ever be. So I'm bullish on future True North.
You're the best.
Thanks, everybody.
Talk to you guys.
Thanks, everyone.